Jason, thanks for the time this morning. We talked about some of the challenges they have, at least with regard to the guidance. Seasonal Q2 is not usually the strongest, though, is it?
No, it's not. But, it's really interesting. When I think about this company, I call it the original sin. If you went back to 2019, actually, Netflix told the street they wanted to glide towards free cash flow. And what the sell-side analysts did is they kept their net ad numbers aloft, but moderated content spend. And there's a very strong correlation between the growth in content spend and net ads. And so they got this benefit during COVID where the content spend came down, the net ads were really good. And now it's sort of, what I would call the new normal, which is more modest sub growth. The good news is, the stock now reflects more muted sub growth.
Right. Do you think there need to be, some have called for an ad-based tier for a long time. It always gets pushed back immediately from management. Do you ever see that breaking or bending?
I guess it's possible. It's certainly not in our forecast, not in our base case, but it's certainly possible. Everyone else is doing it, right?
So, Jason, it's possible. How likely is it then? And at this point, do you think it's kind of an inevitability? Does Netflix lose the longer that they hold out? And what do you think the argument is going to make if they're going to continue to be against an ad-supported base or model? Sorry.
Yeah, I just view it as sort of a free call option, right? What everyone's doing when you do an ad-supported tier is you're sort of lowering the price. You're giving the consumer choices. There are a lot of companies that held out and didn't offer ad-supported tiers, and more are moving that direction. So it's just a free call option for investors. The weird part right now is investor sentiment is so negative on everything that's software-based, everything that's streaming-based, that when companies go out and do an ad-supported tier, it's not viewed as good news, which it was a few years ago. It's viewed as bad news, right? It's like, oh, no, now they have to do the ad-supported tier to keep the sub growth going. That's just how dour the street's mood is right now. It's incredible.
Yeah, especially after so much spending on content. Jason, what do you expect to hear, if anything, regarding their gaming strategy? Clearly they're serious. They have bought 3 gaming studios, which is suggesting an appetite for more. But this fundamental question, people don't go to Netflix for gaming. Are they going to be able to convince people to do that?
I think this speaks to some, a concern that we had about Netflix for years and years, which is, our core thesis is most content is not globally scalable. You are going to have a Squid Games or something that's the exception, but the rule in Hollywood is content is local, right? So what I think Netflix is bumping up against is not so much a belief that gaming is going to be this huge business. It's really more through the lens of what sort of content is created that is indeed globally scalable. And gaming is, watching videos or a movie is not. And so that's what it is. It's a more efficient way to get content out there that is globally scalable. And that's going to help the efficiency of I'll call it the scalability of the business more than anything else. But I don't view it as a standalone revenue stream.